your fund should actually be 30 million or 40 million, and you should keep more for reserves. And my response is, well, would you write a $10 million check in? And they're like, no, we don't do first time fund managers. And I'm like, well, how is that supposed to work then?
What Gotham is asking about is follow-on reserves. And this is a question around portfolio construction. So he's got a $15 million fund and he's going to make a certain number of bets. How many portfolio companies do you think you'll have in the fund, Gotham?
So we've been pretty precise about that. We want to do 35 investments. 20 to 25 of them will be pre-seed, where we are comfortable leading, and 10 to 15 of them will be what we call early seed. Those would be slightly larger rounds. We will either co-lead. We probably wouldn't do it alone, or we would participate alongside a larger investor. Those would be slightly larger checks, 250 to 500.
Okay, so 35 companies. And you have to figure out, based on your $15 million fund size, what the amount you're going to invest in each company based on the number that you want in your fund. So he's figured out he's going to do a couple $100,000 into the first check, and then figure out how much does he save for follow-ons. And you can do anything for follow-ons. It can be from zero to saving $1 for $1 or even more if you want. My thinking on this has changed over time. I used to kind of listen to what everybody says, and everybody says about half of your fund should be follow-ons. I really disagree with that now. Personally, I think if you are an early stage investor and you're good at picking, you should maximize almost all, if not all of your capital going to those first checks, because that's where the real upside is, assuming you're a good picker. If you have a strategy called a producer where you're doing fewer deals and you are spending a lot of time personally working on that company, you might want to save money, a lot of money, maybe even more than half of your fund for follow-ons, because you're personally able to impact where those companies go and funnel a lot more money in at later stages, hoping to keep ownership of just a few. And then even if it's not a huge exit, you'll still make money because you have so much of the company. It's just a very different strategy. So I've done about 50 deals personally, and then 125 or 150 through a fund or SPVs. And when I look back across all of those, it's really hard to pick follow-ons. And so even I'm very good picking first checks. My track record picking second checks is not nearly as good. And so I've stopped almost completely writing follow-on checks except for special circumstances. So really figure out what you're good at, Gautam. If you look at your angel track record and you're good at picking first checks, I'd optimize around that. If with one caveat, your pre-seed stuff in our fund, we do 20% pre-seed. We do save a little bit of money for those because we want at least a $500,000 exposure in our fund by the time they get to seed. And our pre-seed check is always $250K. So that's the only time we're doing follow-on out of our second fund.